Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I would like to share with you the results of some of our intraday setups that we presented to our members this past Friday, March 18th. We use the Slack application as sort of an environment in which to share charts and to have our trading community gather. And what we use that for is to present trade setups, trade alerts, that kind of thing. So, as part of that, we have an intraday setup channel. Okay, and so each morning we present to them basically our hot list of watch list of stocks that we're going to be looking at that morning and into the day in order to hopefully create high probability intraday trade setups. So this is what it looks like here. So each morning we present to them basically a watch list for the day, and that's based on a simple hot list that we generate out of our platform. Okay, and so this is what it looks like. And so each morning we present it to them, and it's in the form of an Excel spreadsheet that we communicate that we transmit to them through the Slack environment. So this is what it looked like this past Friday, and we can see that that was basically sent at 9:50 a.m. Eastern Time. So that's about 20 minutes into the session. Okay, so this is the hot list here, and so this shows that these were all the big winners at the open. And so we can see this is how much they popped at the open. We can also see how much of the pop was due to a gap over here, because we can see what the gap is versus how much the gain is. And so as a result, we can see how much of it, we can see where there's been a gain due solely to a gap, or whether it's a gap and go or a gap and run. And so that's obviously all very useful information. And then, of course, we can see the share size here and the volume. Obviously we want to be trading things that are liquid, and so as a result, further down the list, there are some symbols that only trade 20 or 30,000 shares. We're certainly not interested in that. We're looking for big volume breakout setups. Okay, so at any rate, this is the thing that we communicate to our subscribers every morning. Okay, and then once they get that, then a little later in the morning, then they start to see trade setups here. And so here, and I will show these to you in a moment, but here's a symbol PIK. Here's another one ZH. There's one DIDI. And then there was, I think, one or two more. Let's see, PAGS and MULN. So these were all of the setups that we had presented to our members last Friday. So here's what they actually look like. And so let me bring these up here. So the first one here is this DIDI. So this thing had gapped up from 256 from the previous close. So in the first few minutes of the session, through about 10 a.m., price had kind of run up here, and then you can see right here there was a period of consolidation here. And we're looking at a 2-minute chart here. So price had come up here, consolidated. You can see that little pullback, and then it kind of based out there. And then we noticed these two very, very bullish candles that came racing out of here on some escalating volume. So all of this suggested to us that when price pulled back to this region, there was a good likelihood that we could basically get a bounce out of this. So this was the basis for a long trade. Okay, so this ladder that we put here, this shows the entry price. This is where the stop out point is. Essentially, we give the trade a little wiggle room in order to breathe here, and so basically the risk on this trade would be 15 cents per share from getting in at 320 and getting out at 305 if things didn't go our way. Okay, so everything is predicated on risk. Okay, so this was the setup here. We're waiting for the pullback to 320, and so that was about. So this was you can see the chart here is around 10:12 a.m. and then a little later in the morning, you can see price pulled back here. We actually got the pullback here, and then this thing just ran, and this thing just ran. And depending on what our subscribers did, basically everybody that got into this trade caught at least 4-1 out of it, and some people actually ran it pretty much almost to the top, almost right to the top here. Speaking for myself, I think I got out at around 4-1. So that was a really nice trade for us. Okay, another setup that we looked at that we presented was this PIK here. Again, roughly the same narrative. Price popped up here, consolidated. Again, another pop. Again, we were looking for the pullback here, and so and then basically that was what we were waiting for here. So a little later, and in fact this was actually a lot later, which was a problem. This thing got back about 3 hours later or 2 hours later at about 12:30 p.m. And then it just never really caught fire. And it just kind of hung out here, and eventually it kind of got up to 1-to-1. That's a little before 3 p.m. And this is a Friday, and so we just decided, we would just pull the plug here. And so we got at, and not a home run trade, but a 1-to-1 trade. And again, everything is predicated on risk here. So again, the entry was 6.25. The stop out was at 83. So that was basically a 42 cents of risk in the trade. So basically $42 per 100 shares if you got in. And since we got at 1-to-1, that basically means we made $42 per 100 shares. Again, not a home run trade, but certainly pay some bills. So that was PIK. And then the last one was PAGS. Again, a very bullish move off the open. Again, an area of consolidation here. A couple of green candles here. I had a little concern here about the volume pattern. I generally like to see some escalating volume as price pulls out of here, and it certainly pulled out of here. But again, didn't really get the volume pop that I always like. So I did sort of just raise a concern here, but it was still a quality setup, and so we were waiting for price to pull back here in order to get the bounce. Okay, so in this particular case, the distance we basically gave this thing a dime of wiggle room below the zone. So this is from 1656 up to 1692. So that's a 36-cent difference. So again, our risk on this trade would be 36 cents per share, or $36 per 100 shares, depending on what your position size was. So when we did that, price then pulled back a short while later, around 10:45 a.m., and basically it just kind of ran slowly. And so we in our room here, we decided that we pulled the plug at the high of the day. So you can see right there, those wicks up there. That was basically where we pulled the plug on the trade. And we can see it, at least at the time when I did the snapshot here, it hadn't really gone appreciably above that. But anyway, that was a nice, that was a 2-to-1 trade. So in fact, that was actually about 2.5-to-1 up here. So that shows here that if you got out here, you basically made a little over 2.5-to-1, or $95 per 100 shares. Okay, so that was PAGS. So that was actually a pretty nice day for us. So overall, the summary here is the DIDI, the first one I showed you. That was depending on what you did, you got at it anywhere from 4 to 6 trade units. In terms of units of risk, PIK I showed you was a 1-to-1 trade, and then PAGS, the one that's right here, that was a little over 2.5-to-1. Okay, so depending on what you did, you basically got at it anywhere between 7.5 and 9.5-to-1. And so depending on what your trade unit is in terms of your average risk per trade, that of course determines on how much money you made. So if you happen to be doing $50 per trade, well then you made anywhere from $380 to $480. $100 would obviously be twice that, $760 to $960. If you were trading $250 a trade, then you'd be in the $1,900 to $2,400 range, and of course $500 would be twice that, $3,800 to $4,800. So it all depends, obviously, on what your trade metric is in terms of how much you're putting in on a per trade basis. But the one thing we do advocate is keeping your trade risk constant, or relatively constant, so that this way you can actually have a trade plan. If you're just trading all over the place in terms of your position size, and you put on $200 of risk on one trade and $50 of risk on another, it's really difficult to plan that way. So as a result, one of the things that we do show our members is how to position size properly in order to then actually have a trade plan that you can actually use to essentially achieve a financial goal. So at any rate, that's what went on in the trade room there. So the last thing I want to say is if you are interested in more about what we do here and in joining our trade community, you can go to precisiontradinglabs.com and you can download some free information from us, and we'll be happy to talk to you. So at any rate, that's what I got. Thank you for the privilege of your time. This is Mitch Firestone, and I will see you next time. Thanks very much.